Assalamu alaikum. My name is trading and today I'm here with another AI session. And today my topic is revenge trading and and psychologically collapse. So what is exactly uh, the difference between it? Hi ChatGPT, how are you and how are you doing? So today my topic is about revenge trading and psychological apps.
That's a really important topic, especially in trading. There's a lot of psychological weight to it, like when people experience that urge to get back their losses after bad trade. What specifically are you looking to unpack or discuss about it?
So what is exactly revenge in finance market?
Yeah, so revenge trading is when a trader, after experiencing a loss, tries to quickly recover that money by making impulsive, often larger or riskier trades. It's driven by emotion, frustration, or desperation rather than a calm, rational strategy. And it can really lead to a downward spiral because those emotional decisions often amplify losses.
Why it's happened? Why? Because why it's the emotional triggers happen? It why happens? Because of what thing? I think it is
Exactly.
not the exactly same losses in it. What is one thing that do? Because not it is like uh, about feelings or losses about this thing.
Yeah, that's a huge point. So it's less about the financial numbers themselves and more about how we perceive them. After a loss, people often feel a hit to their ego or fear missing out, and that emotional reaction just takes over, making them disregard their planned strategy. So it's really that gap between rational thinking and emotional impulse.
So why does loss triggered and the urgent win it back system?
Yeah, so that really ties into our brain's reward system. When we lose, it feels like a threat to our sense of control or even self worth. That sets off a stress response, and suddenly we just want to regain that ground immediately. But ironically, that urgency blinds us to risks, and we end up making poor choices, often leading to even bigger losses.
So so is revenge trading driven more by ego or financial pressure?
Yeah, that's a great question. It's usually a mix, but ego plays a huge role. People feel like they need to prove something to themselves or others that they can recover. But financial pressure, like being close to hitting a margin call, can also push people over the edge. So it's both that personal pride and that external risk working together. हाँ 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 बिल्कुल। मैं अभी लाइव वीडियो शुरू कर देता हूँ और जैसे ही तैयार हो जाएगा मैं तुम्हें बताऊंगा ताकि तुम सब कुछ वहीं देख सको। Of course. Yeah, let's stick to English. So if there's anything else about revenge trading or psychological
Yes.
collapse you want to explore,
So
yeah,
uh, how does
yeah,
revenge trade wait? How does revenge trading difference from strategy re-enter?
that's a really key distinction. So, with revenge trading, you're acting impulsively, chasing that emotional relief. Strategy, on the other hand, is a calm, planned approach. You're sticking to your rules, assessing risk, and making decisions based on logic, not just emotions.
Why do traders abandon their system after losing trades?
Yeah, that happens a lot because after a loss, traders often feel this intense pressure to make up for it immediately. And because they're so emotional, they start second guessing their system. They might abandon their risk controls or chase bigger returns, hoping just to bounce back. And that's when it really spirals.
Like so does anger reduce most analytical systems' ability.
Exactly. Yeah, that's the big danger. When emotions take over, you stop analyzing the data logically. Instead of sticking to your system's risk parameters or your strategy, you just react, and that leads to more mistakes. So, keeping that analytical mindset is really key.
Okay, so why does the brain see losses as threat instead of data? And if so, first answer these questions.
Yeah, absolutely. So, the brain is wired to react to losses more strongly than to gains. It's part of what's called loss aversion. So, when we lose, it triggers a bigger emotional response fear, anger, or frustration than when we win. That's why we tend to abandon data driven decisions in favor of just trying to stop that emotional pain.
By the way, co- there is something that people said become a man by taking the risk on your heart. It is I have been made. It is like if you are in trading, be man hate trading on your heart. Like take losses on your heart.
Ah, I see what you mean. Yeah, there's this idea that some traders feel like they're being really brave or resilient when they take on big risks, almost like wearing their losses as a badge of honor. But really, it's just emotional gambling. They're tying their identity to each outcome, and that's super risky.
Do they? Uh, why do is revenge trading an emotional reflection or decisions or mind taking decisions?
Yeah, that's a big part of it. Revenge trading really is an emotional reaction. It's almost like the mind is hijacked by that need to fix a loss. Instead of calmly weighing risks, people make these snap decisions based on fear or pride. So it's not a rational process, it's this deep emotional push that overrides their usual judgment.
So why do traders increase position size after loss?
Yeah, exactly. So after a loss, traders often increase their position size as a way to try to recover quickly. They think if I put more in, I can get back what I lost. But that's exactly when risk spirals because now they're taking on even bigger bets without adjusting for the increased danger.
So why do traders increase? No. So can awareness allow stop preventing trading?
Yeah, absolutely. Building awareness is crucial. When traders recognize that emotional reaction in the moment, like that urge to double down, they can take a step back, breathe, and remind themselves of their rules. So that self awareness lets them pause before they make a reckless move, keeping them anchored to their plan.
Okay, so why does losing feel like a personal failure?
Yeah, that's such a big thing. Losing in trading can feel really personal because, especially if your identity is tied up in being a successful trader, a loss can feel like a failure of yourself, not just a statistical outcome. So that's why it hits so hard, and that's why it's so important to separate your self worth from your trading results.
So how does ego turn a small loss into a psychologically battle?
Yeah, that's a really important shift. The ego tends to see a small loss as a big threat, like a dent in its competence. But if you can reframe it so that a loss is just part of the process, then it takes the pressure off. It's like, okay, this is just data, not a verdict on me as a person. So that kind of perspective really helps keep you grounded.
So what does shoulder dominance play in the chasing loss?
Yeah, that's the key. Instead of chasing the loss, you want to take a step back, pause, and reconnect with your original plan. Trust that the strategy is built for the long term. So you take smaller, measured steps, keep your risk in check, and just stay committed to your process.
So why does emotional flood destroys logically thinking?
Yeah, so emotions kind of hijack that rational step by step thinking. When you feel fear or frustration, your brain pushes you to act fast, almost like a reflex, and that shuts down the slower, deliberate part of your brain, the part that weighs probabilities, risks, and long term strategy. So once emotions get in, logic gets crowded out.
So why does manipulating trade impulsive trades lead to bad trades?
Yeah, exactly. So those impulsive trades often skip the careful analysis. Instead of weighing risk or sticking to a plan, you just react in the moment. And that usually leads to chasing losses, overtrading, or taking on way more risk than you intended.
So why does traders how does fear being wrong instantly correct your behavior?
Yeah, that's a really common one. Fear of being wrong taps into that deep need for validation or control. So when that fear hits, people overcompensate. They jump into trades or make big moves just to avoid that sense of being wrong. And that's when they get off track.
So do you think it is good of is revenge trading is a form of basic behavior?
Yeah, I think it really can be. It's almost like a survival instinct, this basic drive to regain control after a perceived threat. And once it kicks in, it's like an automatic loop. So, yeah, it does fall into this broader category of impulsive, even kind of primitive behavior.
Why do traders ignore risk management during emotional?
Yeah, exactly. So, in those moments, traders often throw out their risk controls like position sizing, stop losses, all that, and just focus on getting even. And that's what makes those emotional trades so dangerous because they stop being calculated risks and just become this blind push to win back what was lost.
It is good or not.
Yeah, exactly. It's really not good. I mean, it just sets you up for bigger losses and a kind of downward spiral. So the real focus should be on staying disciplined, sticking to your plan, and just not letting that emotional pull drive your decisions.
So does marketing value amplify physical instead?
Yeah, exactly. That's where the value is. When traders keep their focus on the bigger picture, on the long term strategy and risk management, they're able to make more sustainable decisions. So it's not just about that one trade, it's about staying consistent and anchored in the bigger plan.
Hmm. So it is. What
Yeah.
does so how does during
Ah, I see what you're
how
getting
does
at.
doubling down the results later can destroy?
Ah, great question. So when someone doubles down on a losing trade, they often ignore their original risk limits, like position size or stop losses, and it compounds their losses. That's why it spirals, because the more risk they pile on, the more the potential loss grows, and they start chasing even harder.
So why do traders just amplify and jump into every fake logic?
Yeah, it's really about that need for immediate relief or a sense of control. Once they feel like they've lost, their brain tells them to do something fast. So they jump into more trades without thinking it through. And that's where the impulsive logic takes over.
So why does this one's product ego is a harm capital?
Yeah, that's a big part of it. When you build that awareness, you start recognizing when the ego is pushing you to act and you can step back before you do something rash. So instead of letting ego drive the ship, you keep your focus on the process and the long term plan, and that acts as a safeguard.
So what is performance collapse after emotional triggered?
Yeah, exactly. So after an emotional trigger, performance tends to drop because decisions aren't rooted in logic anymore. You might skip your normal checks, act too quickly, or misjudge risk. So without that emotional regulation, your overall trading skill just suffers.
So when do you trade you should control on your mind? And what should you do? Listen to your mind or listen to your heart?
Yeah, that's a crucial balance. You definitely want to control your mind, so you anchor yourself in your strategy, your rules, and that big picture. Instead of just reacting from your gut or heart, you pause, take a breath, and let your logical side guide you. That's how you keep control.
So how does performance collapse? No, why does panic lead to an interrogation exist and something kind of you could say that.
Ah, yeah. So panic really narrows your focus. Instead of seeing the bigger picture, you fixate on immediate fear, like that single trade or that single outcome. And that sense of existential risk, like you're losing everything, just pushes you to make worse decisions. So that spiral happens because you're no longer grounded in the present facts. You're just reacting out of sheer fear.
So people react in fear, not in.
Exactly. Yeah, when fear takes over, people stop analyzing and instead they just react, usually in ways that make the situation worse. So by staying grounded, keeping that logical distance, that's what prevents fear from controlling the next move.
So people should think about the fears.
Yeah, exactly. Instead of pushing it aside, you acknowledge it, but you don't let it control you. You say, okay, I feel this fear, but I know it's just a signal, not a command. And that awareness gives you the space to make a more deliberate, calm choice.
So how can quickly and discipline collapse under stress?
Yeah, absolutely. So when fear gets out of hand, it pushes you into that stress cycle and you lose confidence in yourself. So instead of staying calm and adaptive, you become rigid or avoidant, and that's when the whole structure can just break down. Your decisions, your discipline, everything.
So is psychological collapse a sudden?
Yeah, it can be. Sometimes it's a gradual build up, but other times it just happens suddenly, like a breaking point, where all that emotional and cognitive strain just snaps. And once it does, it's really hard to get back on track.
What to tell was a shame after revenge episode?
Yeah, that's a really good question. So, a big part is having a cooling off period, stepping away, taking a break, and letting yourself reset. Also, revisit your trading plan, remind yourself of your goals, and maybe even get a mentor or a support system. That way, you break the cycle before it takes over.
Why do professional traders stop trading after hitting their daily low limits?
Yeah, that's a really smart move. By stopping once you hit that daily loss limit, you prevent yourself from getting caught in that emotional spiral. It helps you protect your capital and it gives you that mental reset so you can come back fresh the next day.
So it is good for health.
Yeah, absolutely. It's a form of discipline, and it's really about protecting yourself from those emotional reactions. So when you step away after hitting that limit, you stay in control, you protect your long term performance, and you avoid just burning out or doubling down.
So you are eventually saying that the discipline, the stress, the more brutally emotion can be. What is the easy answer of it? That emotional can be easily override by mind.
Yeah, exactly. So the stress and emotion can definitely overwhelm that rational mind. The easy answer, though, is practice. The more you build that discipline, pausing, checking your emotions, staying focused, the more
But
it becomes second.
how? How can it override mind? You know, in two cases, it's morally happen. One thing
Yeah,
that you are first going to listen to me, then you will talk. The first thing, if you cooked, if the trading cooked you, first your mind will said it's okay, so do not do it. Your inner voice, which is called ego inside of you, he will call cook them. It is like
ah,
that. You understand? You also know about this. Cook them.
yeah,
First of all, he cooks you, then you cooks them.
right, exactly. So once you catch that inner voice, that ego whispering to just do one wee thing, you pause it, and instead you remind yourself, no, I am in control, I stick to the process. That's how you flip it, so you don't get cooked by the market, you stay in the driver's seat.
So can taking a break as such or reset emotional stability?
Exactly. Yeah. Taking a break is huge. It gives you that space to calm down, let the emotional intensity fade, and then come back with a clearer head. So that break is really what helps you regain stability and get back to disciplined trading.
Can you give me a top list of traders which are good at trading?
Some of the most highly regarded traders include Jesse Livermore, known for his early stock market play, George Soros, who famously shorted the British pound, Paul Tudor Jones, who predicted the 1987 crash, Jim Simons, who used mathematical models for huge returns, and Stephen Cohen, who built a reputation with consistent aggressive trading. They all emphasize emotion management, risk control, and a clear disciplined process.
So are they famous to follow them?
Yeah, Yeah, exactly. A lot of those traders really focus on discipline and emotional regulation. So if you're trying to improve, it's not about copying their every move, but about studying their approach, how they handle risk, how they stay calm, and how they stay committed to a process.
Okay, so the final question is final truth. Are the traders defeated by the markets or by their own unmanaged emotions?
Yeah, that's a really profound point. Most often, it's their own unmanaged emotions. The market is always uncertain, but it's the emotional reactions like fear, greed, or panic that really push people off course. So, mastering yourself is often what determines success, not just the market conditions.
Um, so are losses actually necessary for physical growth or so everyone and who have watched till here, thanks for watching, like and subscribe. Thanks for watching. Bye bye.
Yeah, exactly.